Howdy, everybody. Welcome to Liberty Call. Today is Monday, July 7th, 2025. Hope you're having a fantastical day out there in the interwebs. Hope you had a good weekend. Long weekend for me. Took a Thursday, Friday, Saturday, and Sunday for myself. So anyways, hope you had a good weekend. Got some chores done, bunch of stuff. Got to see the Astros play on Thursday. They lost. The only game of the road trip that they lost, I was there, and my wife. But they swept the Dodgers over the weekend, which was a nice little thing there. So anyways, to the markets. Wall Street stumbled hard to kick off the week as Trump slapped 25% tariffs on Japan, South Korea, and several BRICS nations. The Dow tanked over 600 points at one point. The S&P slid 1.2, and the NASDAQ dropped 1.3, with tech stocks leading the rout. Treasury yields jumped in, oil wobbled, and the dollar found footing. With more tariff deadlines looming, the trade war roller coaster isn't slowing down anytime soon, folks. So before we get into the news and break it all down, need some help from you. If you could give me some thumbs up, a like, share, subscribe, and follow, and press that notification bell. All right, let's get into the markets. Dow Jones finished the day down 0.94%, 422 points, closed at 44,406. S&P 500 down 0.79%, 49 points, closed at 6229. NASDAQ down 0.92%, 188 points, closed at 2412. The VIX was up today 1.77%. It's at 1779. Canada down 0.06, Brazil down 1.26, and Mexico down 0.96. Headed over to Europe, Germany was up 1.06%, the UK down 0.19, France up 0.35, Netherlands up 0.61, Spain up 0.73, Italy up 0.74, Switzerland down 0.17, and Portugal down 0.57. Let's see here. Russian exchanges both red today. The MOEX down 1.6, RTSI down 1.46. And the overnight markets, the Nikkei in Japan was down 0.56%, Australia down 0.16, New Zealand up 0.33. In China, the Shanghai was up 0.02, Shenzhen Component down 0.7, China A50 down 0.42. DJ Shanghai up 0.02, Hang Seng down 0.12, and the Taiwan weighted was down 0.53%. All right. Excellent news. All right. Well, let's hop into the weekly economic update, see what's going on there. Trade developments and continued momentum pushed all three major averages to modest gains again for a shortened holiday trading week. The S&P 500 rose 1.72%, while the NASDAQ added 1.62%, and the Dow Jones Industrial Average advanced 2.3%. The overseas markets increased by 0.19% through Thursday. Stocks gain on trade developments. Stocks continued their momentum from the prior week's record following Canada's rescinding of its digital services tax, rising on optimism as investors waited for more news on trade. The S&P 500 and NASDAQ took a breather on July's first trading day, while the Dow Industrials posted a modest gain. Then stocks rallied after the news of the trade deal with Vietnam, moving past the latest ADP employment report, which showed reduced jobs last month for the first time in 2 years. In a quick retort to the ADP report, a better than expected June jobs report from the Bureau of Labor Statistics gave stocks another boost, reassuring investors that the U.S. economy was weathering trade and geopolitical shocks. The S&P and Dow hit record highs as the short trading week ended. All right, jobs report mostly positive. The labor report for June had a few points for investors to cheer. First, employers added 147,000 jobs in June. That was 37,000 higher than economists were expecting. Unemployment ticked down to 4.1% from 4.2%. Previously reported job gains from April and May were revised upward by 16,000. Still, companies are in a no hire, no fire mode as they wait to see how trade policy impacts the economy. Caveats to headline numbers. Most gains were seen in government and healthcare. That's not good. Several other sectors, including manufacturing and professional services, were flat or diminished. The takeaway, good news overall, but uncertainty still lingers beneath the employment surface. Key economic data this week. Tuesday, we have the NFIB Small Business Optimism Index and Consumer Credit. Wednesday, wholesale inventories, the 10-year Treasury note auction, and June Fed minutes. Thursday, weekly jobless claims. St. Louis Fed President Alberto Musalem and San Francisco Fed President Mary Daly are speaking. And Friday is the federal budget. And no major companies reporting earnings this week. So, all right. Let's jump into the market recap. S&P 500 slumps as Trump announces 25% tariff on South Korea and Japan. U.S. stocks slumped Monday as renewed trade tensions and political uncertainty weighed on markets, overshadowing Thursday's record highs for the S&P 500 and NASDAQ. President Donald Trump reignited global trade war fears by announcing a 25% tariff on goods from South Korea and Japan, set to take effect August 1st. Trump cited longstanding trade deficits, $68.5 billion with Japan and $66 billion with South Korea, as justification for the tariffs. He also threatened further escalation, saying any retaliatory tariffs would be matched and exceeded by the U.S. The tariffs come amid stalled trade talks, with only preliminary deals reached with the UK and Vietnam and a truce with China. Treasury Secretary Scott Bessent hinted at more trade announcements within 48 hours, noting a flood of new proposals following Trump's announcement. Markets remain on edge as Trump has previously floated tariffs as high as 50% and over the weekend suggested rates could reach 60 or 70%. Countries aligned with the BRICS bloc also faced additional levies over alleged anti-American practices. Well, I don't think having a gold-based currency is really anti-American. It tells you something that our government is doing so much to put down the BRICS and allows the U.S. government to devalue its currency to meet the demands of the military-industrial complex and the welfare state. All right, jumping back in, market attention is also turning to Wednesday's release of the Federal Reserve meeting minutes for clues on interest rate policy. The Fed left rates unchanged in June, citing uncertainty around Trump's tariffs. Tesla shares fell sharply after CEO Elon Musk announced plans to launch a political party, raising concerns he's diverting focus from the company as it battles declining sales and shifts towards autonomous vehicles. The announcement worsens Musk's ongoing feud with Trump over the president's recently passed tax and spending bill, more like spending. In other corporate news, CalVista Pharmaceuticals jumped after FDA approval of its new hereditary swelling disorder drug. Okay. Private prison operators Geo Group and Core Civic gained on expectations of increased funding from Trump's bill. Stellantis stock slipped as regulators opened a recall inquiry into its Ram trucks. And Stellantis is Dodge for those of you all out there who aren't up to date on who owns that company. All right, one last article here. This is the Monday Morning Outlook from Mr. Brian Westbury at First Trust. This week's article titled "Not So Hot." Let's see what he has to say. Friday's much anticipated U.S. employment report initially generated optimism, with payrolls rising by 147,000 in June, surpassing expectations of 106,000. Upward revisions for prior months also added 16,000 jobs, while the unemployment rate unexpectedly ticked down to 4.1 from 4.2. These headline figures painted a rosy picture, especially compared to Thursday's ADP report, which followed a 33,000 decline in private payrolls. However, a closer look reveals a less encouraging reality. Private sector payrolls grew by only 74,000 in June, and after downward revisions to the prior months, the net gain was just 58,000. Notably, half of June's job growth and all upward revisions came from government hiring, a trend not seen as a sign of lasting economic health. Yeah, government jobs aren't real jobs. It's just basically a make work, keeps people busy. It's essentially welfare. The more telling core payroll measure, which excludes government, education, and healthcare, and leisure and hospitality, all heavily influenced by government policies, showed a meager 3,000 job gain in June, the weakest so far in 2025. Meanwhile, the drop in unemployment rate was driven not by job growth, but a 130,000 decline in the labor force, raising concerns about workforce participation. Average hourly earnings rose by 0.2% in June, translating to a 3.5% annualized wage growth, consistent with a cooling inflation outlook given the Fed's 2% inflation target and estimated productivity growth. Looking ahead, real GDP may rebound in Q2 after a Q1 contraction, but this likely reflects the end of tariff-driven stockpiling rather than sustained economic strength. Trump's recently passed one big beautiful bill, or one big beautiful pile of crap, which extends existing tax cuts and trims some welfare spending, not nearly enough, could help long-term growth modestly, but isn't expected to spark a Reagan-style boom. Markets, meanwhile, appear complacent about recession risk with weak manufacturing data and uncertainty over Fed policy amid speculation about Trump pre-selling Powell's successor. Caution remains warranted. Yeah, it's a mess, folks. All right. Well, that's everything that I had to cover for today. If anyone needs anything from me, where do you want to go? DSAFinancialGroup.com. All your financial planning needs can be addressed there. Give me a call. I'll be glad to help. Hope everyone out there has a wonderful Monday evening, and I'll talk to everyone again next time. Adios.